It seems that just about every week there's an announcement of another new high-end luxury apartment project in the Washington, D.C. area. How is all of this new development affecting the market's performance? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons, your Washington, D.C. update. Coming out of the recession, few markets were hotter than Washington, D.C. Jobs were being added in big numbers, apartment vacancies were dwindling, and rents were surging. So that inspired a long line of apartment developers wanting to get into the D.C. market, and now we're beginning to see the effect of all that attention from developers. That first new wave of apartment development is already completing. 1,300 units completed in Q2 2012, and then 2,451 units completing in Q3 of 2012. So you can see on this chart that annual new supply trend line has turned sharply upward again, and it will continue to go up. Take a look at this chart showing the total number of units under construction by quarter, and you can see that DC is right around its decade highs, 15,883 units underway at the end of 2012's third quarter. That is the largest total of any market in the country, just ahead of New York, Dallas, Seattle, and Los Angeles. And here's the breakout of construction by submarket. And you can see that the vast majority of the construction is coming in the urban core, high-rent submarkets, more than 3,200 units underway in central D.C., just over 2,100 units in northeast D.C., nearly 1,600 in the Tysons Corner area, and nearly 1,000 units in North Arlington, 851 in the Navy Yard Capitol South submarket, and 817 in downtown Silver Spring. So that leads to the big question. What effect is all this new construction having on apartment fundamentals? Well, occupancy, as you can see, is still holding strong. A few ticks under 96% consistently for the past 6 quarters, 95.7 as of Q3, very healthy, and occupancy is in good shape in all product age groups and in most submarkets. But the effect of new development is more apparent in the pricing side. You can see that year-over-year rent growth levels have dropped off as new construction has ramped up. Top 5% in the second half of 2010, slowed to around the 4.5% range for much of 2011, dropped to 3.1 in Q2 of 2012, and now to 2.2% in Q3 of 2012, and that was DC's smallest hike in 10 quarters. And if you followed our forecast before, you've known that we've been moderately optimistic about the pricing outlook for the DC apartment market, and we've now revised down those forecasts a little bit. For the next year, we're expecting rent growth of 2.6%. And the reason for that is almost entirely new construction. The rush to build new apartments has ramped up even faster than we had expected, and permit levels remain very high, so there's no real end in sight yet for when this big surge might start to crest downward again. And the problem is that a lot of this development is the same stuff. It's very high-end, luxury, expensive product in the urban core. And in previous cycles, this development has been much more spread out in terms of both product type and in location. And typically, it's the urban core that drives up rent growth levels for a metro. And with so much new high-end supply in the urban core areas, it's going to be hard to get much rent growth for the metro area overall, with so much new competition coming into the market. But this is worth pointing out. We always pay a lot of attention to the year-over-year numbers, but the bigger picture is important to look at too, since few investors are looking at one-year holds in their portfolio. Take a look at this chart showing same-store rent growth since the end of 2007. And DC is 5th in the country with same-store rent growth of 14.8% over that time, behind only San Jose, San Francisco, Pittsburgh, and Boston. That's a huge number. So let's not forget that overall, this market remains one of the nation's healthiest. And it's also worth pointing out here that the economy also remains very strong in the DC area. Nearly 40,000 jobs added just in the past year. And compared to pre-recession levels, DC has had some of the best job growth of any market outside of Texas. And so there's plenty still to like about DC, and the long-term outlook is certainly very favorable. But there'll be some pains along the way as this market wrestles with a lot of new supply over the next couple of years. So that wraps up for DC. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.